After a tepid start to the week, copper prices plummeted over 9 cents due to reports that President Donald Trump's $1 trillion infrastructure plan could be delayed until 2018. The bipartisan supported stimulus plan to repair the crumbling state of American roads, bridges, and other necessary systems have been pushed to the back burner in favor of tax reform and overhauling Obamacare. Despite the significant sell-off, Metal Bulletin analysts maintain their constructive stance on copper as long as prices remain above the 50-day moving average. A firm break below it would suggest that the rally is near its end, resulting in a further sell-off. Copper prices have been trading around a one-year high in recent weeks due to supply issues out of Indonesia and Chile. But without added demand in the form of things like infrastructure spending, the red metal could experience selling pressure. But supply issues at Gasberg Mine in Indonesia and Escondida in Chile have yet to be resolved, with Escondida owner BHP Bulletin stating earlier this week that it won't replace striking workers. The Escondida strike is entering its third week, and every lost week removes around 25,000 tons from the global copper market. Not an inconsequential sum considering the International Copper Study Group reported on Wednesday that the global market is in a deficit around 90,000 tons. Elsewhere, there are reports that Freeport-McMoRan will explore a lawsuit against the Indonesian government after the government denied an export permit for its concentrate production. It's all a bit up in the air for now, but with both mines equaling around 10% of global supply, bulls will control the market until a resolution is reached. On the political realm, news was sparse as President Trump and congressional members spent most of the week outside the Beltway. The lack of executive orders and an announcement that tax reform will be presented by August of this year has kept equity prices at all-time highs, while U.S. growth looks well-positioned moving into the second quarter. Because of the optimism around the economy, the Federal Reserve is open to raising rates in March, according to the latest meeting minutes. The Fed has aimed at raising rates 3 times this year, after only increasing the Fed's funds rates twice in the last decade. But Fed Chairwoman Janet Yellen has been adamant on avoiding another bubble caused by artificially low rates. Moving to next week, a host of data releases, including car sales, are due for release, with Chairwoman Yellen capping the week with a speech on Friday. I'm Dalton Barker from Metal Bulletin Group in Chicago.